let me just tell you that I'm the luckiest guy on the planet, man, because I married a wonderful woman. The best part about her father was Nelson Nash. IBC is a very, very specific what it is. It's not a generic term for anybody to do anything they want to. If you hear things like drive cars for free, then you got a problem.
If you think back 20 years ago, 30 years ago, if somebody would have asked you, David, how would you define success? What would your answer have been? And how is that different than what your answer would be today?
Success would be like financial success, like not worrying about money, family happy and healthy and not have to worry about money. Success now is to
Welcome back, everyone, to the Save Yourself podcast brought to you by Unlimit Wealth. I got my cohort, John Blaylock, with me today.
Hello, hello.
And our good friend, Mr. David Stearns, with us today.
Hey, thank you for having me. I appreciate it.
Yeah, welcome, David. Glad you're here.
Good to be here. Great place to be at.
Yeah, so David, I'm not going to steal his thunder. I'm going to let him break it down. But David is family with Mr. R. Nelson Nash, and we're going to let him dig into that. But it's a real treat for us to have him here and kind of speak from the hip on some interactions he's had with Nelson's over the years and all about the Nelson Nash Institute anyway. So, David, just tell us a little bit about you. Start all the way from the beginning.
Well, let me just tell you that I'm the luckiest guy on the planet, man, because I married a wonderful woman who we shared many years together. And but the best part about her father was Nelson Nash. So it's like, of course, when I first met him, he was just Nelson Nash. He wasn't anybody special. But yeah, I go back till 1978 with the Nash family. We met in Hawaii, actually. I met my wife, Kim, in Hawaii. And it was a short romance because I don't know how much detail you want me to get into here, if this is a family channel or not. But anyway, I was in the military for quite a long period of time, and my first duty assignment was in Schofield Barracks, Hawaii. I was second lieutenant in the field artillery, in a great unit out there. And my best friend was Barry Nash, and I'd sponsored him to the unit, and we became good friends. And he kept telling me about his sister. Yeah, you got to meet my sister. She's really cute. You know how those stories go. Everybody's got one of those, right? And probably 99% of them never work out, right? But anyway, after finally he said, listen, she's coming to Hawaii with her parents. He worked for Equitable Life at that time. He was an insurance agent, obviously. And he always won trips because he was a top producer, top of the table kind of guy. And they said, we're going to Hawaii for a trip, and they'll be here, so why don't you come down and meet them? I said, no. Finally, a week or two later, he said, listen, my parents flew back to Birmingham, and they let my sister Kim stay, and stay with me for a couple more weeks. And so, we're going out to lunch today. Why don't you join us? Okay, fine. Joined them, met her, and like a month later, I proposed to her.
Wow, I didn't realize it was that quick.
It was quick. Well, the thing was, she was staying with Barry on Schofield Barracks on the military installation in his bachelor officer quarters. He had 2-bedroom unit, and I was living in an apartment on the other side of the island. And it was like, hey, listen, maybe we should make this permanent. It'd be more convenient, number one, and cheaper, number two. But anyway, I said, she said, yeah, let's definitely get married. And she said, well, what are you looking at for a date? I said, how about August? And this is like 3 months later. And she goes, why August? And I said, well, I talked to military housing on Schofield Barracks, and I said, what's the best time to get quarters for a second lieutenant on Schofield Barracks? She said, usually the big turnover is in the summertime, so August is pretty good. If you get on the list the next, by August 1st, you can usually get quarters within 30 days. So I said, hey, let's get married in August. And so it was like, great. Everything was good except for I forgot to ask permission from her father to marry her. And, I was a Yankee at that time.
So what was like the first time you met Nelson? Was it in Hawaii? They came?
Well, I was nervous about it, obviously. He already pre-interviewed three folks that we knew, that my parents and I knew, to get some references.
Some intel?
Yeah. He called up my parents and said, hey, listen, give me three names that are relatively close to Birmingham. And so he got one in Columbus, Georgia, one in Montgomery, and then somebody else somewhere else. But anyway, he actually drove around, made an appointment, and sat down with these folks for a couple hours. But anyway, so I finally met him. It was either the day before the wedding or 2 days before the wedding. I can't remember, but they flew into Honolulu, and Kim and I picked him up. And he looked at me and said, "Boy," he goes, "we need to talk."
That's exactly how he phrased it in seminars.
Yeah, "Boy, we need to talk."
Yeah.
It's like, "Yes, sir." And then so we took him up. We set him in a nice little place up on the North Shore for a week. And so they settled in. He goes, let's talk. And so he pulls out his little portfolio, the leather portfolio, and he pulls out some paperwork. He says, you need to sign this. It's like, I thought it was a pre-nep or something, I don't know what it was. It was an insurance policy application for a whole life policy from Equitable Life. And I would have signed anything at that point. But it's like, we talked about what it was and why I needed to have it and all this stuff like that. I said, sure, no problem. I had no idea what the premium was, but it was proportionate to what I was making, which was not much. Right. And so that was my first interaction with Nelson Nash, And from then on, it was like, we really hit it off, because I was probably one of his few clients that didn't argue with him about what I was getting and why I was getting it.
Well, talk about somebody being convicted about the importance of life insurance. The first interaction with their future son-in-law is sign here.
Sign here, yeah. Well, you guys know this, but his first policy that Nelson actually, his parents bought it for him because he couldn't afford it. But he bought a New York life policy. His parents did it, and they were the beneficiaries. But he wanted it. It was when he was 13 years old.
Oh,
that?
I did not know that. I thought his brother sold him his first policy.
His brother did the State Farm policy that he...
No, he bought a New York life policy when he was 13. His parents signed the application. His parents were the beneficiary. It was like $10.45 a year, something like that. And then he bought his second policy when he was 16. Again, a New York life policy, a $1,000 death benefit. And the third policy he bought from New York Life was on his fiancée, Mary, when she was 18. That he bought that like a month before they got married. So he was a whole life guy from way back.
Yeah.
From middle school.
Right. Yeah. So anyway, we have all those policies in our archives, man. They're still there.
That is awesome.
Yeah.
Yeah. So fast forward a little bit. So you get out of the Army. At what point did...
Yeah. When was that? What year did you wrap up in the Army, and then what?
Well, I wrapped up the Army in a different decade in 2004. Okay. And we moved to Birmingham in 2000. Kim and I did from Atlanta. I was assigned over there. And my plan was to retire in Atlanta in 2000. And I didn't like it. It was like a rat race. I was deployed all the time overseas, so I couldn't really get any roots in the community and whatever. So this opening popped up in Birmingham, actually in Hoover, where you can work with the reserve component. So I took that job to get over here to retire here. It's in 2000. And then 9/11 popped the next year, and that kind of extended me, so I ended up going until 2004. But, Nelson published his book in 2000, and he asked me around 2001 to help him because it started to, growing. He needed help. And I said, hey, sorry, I can't like get out of the military after 9/11. It looks like I'm, dodging something. But I still work with him off to the side. I helped him a lot, after hours and whatnot. But so my first professional insurance gig was part-time with him starting around 2001. And I officially retired in 2004 and started working with him.
So David, were you and Kim practicing infinite banking like the way we practice it now? All the way back, like
no,
through the 80s and 90s? Or?
No. It was just buying life insurance is all it was. Okay. And we did policy loans, don't get me wrong, but it was not about infinite banking. It was not about overfunding your loan repayments. It was not about creating a system of policies. It was about, number one, ensuring everybody that you had an insurable interest in. And I had 4 kids, and so we had policies on all 4 kids. and Nelson bought policies on for my kids. I was loaded up. Kim was loaded up before she was diagnosed with cancer, and it was like, hey, I need a new car. Can I get a policy on them? Sure. How much you need? $15,000. So the check would be in the mail. But it was not about thinking about this as a quote unquote lifestyle like we do now.
And so when did the Nelson Nash Institute, I mean, I was there, I remember meeting you, seeing you and Nelson in Orlando.
Right.
At a conference. And that was the first time I'd heard Nelson speak, and then realized, wow, these guys are in Birmingham. And then I think it was about 2008 when it kicked off. When did you guys realize, hey, we've got to, there's a lot of noise out there. We've got to create something that is the gold standard for the public to know what's the truth and what's not. How did that come about?
Well, it was kind of a slow process because, Nelson was a one-man shop. He just really believed in getting to know people and working with people, and that's why. And the cornerstone of the IBC was his seminars. That's what it was. And I kept thinking, man, this, we can't do this. This is not going to work because we're not going to reach enough people. And so we started. We didn't start an institute, but we started, promoting the seminar on DVD and stuff like that, and trying to recruit agents. And then it was, we need an agent training program. That was the key word, an agent training program. So everybody's using the right vernacular. They're using the right materials and saying the same thing, whatever. And I co-opted with several insurance agents to try to do that, and it never worked out. Okay, it just didn't work. And so in 2012, Carlos Lauer and I and Nelson got together and we said, hey, Carlos was a big Austrian economic guy, and so he said, we need to create that training program between us, and we need to pick a couple of insurance companies and work directly with insurance companies, their actuaries and their legal, and we do it ourselves. Nelson does the insurance part, and Bob Murphy and I will do like the economic part, and we'll create a basic program that teaches IBC, but it also really focuses on the problem both in the household and also the national problem of fiat money and fractional reserve banking, and how the insurance companies, they don't inflate the money supply. It's hard currency that they use. Even though they keep the money in the bank, it's money that's on deposit. It's not created money. And so that was the genesis in 2012. And the Institute actually started in February of 2013. We have an annual think tank, we call it, our meeting of our membership. And so we launched it in February of 2013. Okay, and we didn't call it Nelson Nash Institute at that time. We didn't change the name until about 2014, something like that. And the reason we call it the Nelson Nash Institute, it goes back to what I said about Nelson making this he wanted to be personally involved, and he wanted it to be more than just a sales system, which it was not. It's about a way of life, and I said lifestyle earlier. It's a lifestyle, and it's about personal relationships, and it's about personal responsibility. And so the best way to set the nomenclature is the Nelson Nash Institute, because it was his personality, his code of ethics and morality code that really underpins this whole thing.
There's a reason why he used the first half of his book to talk about human behavior, right?
Exactly, yeah. And if you go back to, Ludwig von Mises is a big Austrian, probably the number one Austrian. His big treatise is Human Action. Okay, it's the same thing. It's about natural law, both humanity and physical. And it's the same thing with Nelson's book. The most important part of the book is the human factors, right? Because no matter how well the policy is designed, if the policy owner doesn't use it responsibly and understand some of the pitfalls, then he's gonna come down in a flaming wreck.
So about this time, as people are reading the book is spreading through kind of a grassroots effort of seminars around the country. I remember bringing clients, and I don't know how many I attended, but as people read the book, and they call you, what were some or are some of the most common questions they ask? Most
of them is like, you guys are crazy. This is nuts. He goes, what's this all about? You know, so the biggest problem with the book is the illustrations. Because the calls we got were, here's a standard call from an insurance agent. You know, this doesn't work. I said, well, you know, they either talk to me or they talk to Nelson. You know, back then, they talked to Nelson a lot more than me. Okay, they say, hey, I went to illustration 1 in equipment financing, and I couldn't replicate the numbers on my proprietary software from my insurance company X. And so, you know, where'd you get these numbers from? And Nelson would be very frustrated. He goes, listen, those aren't illustrations from an insurance company, illustration like an in-force illustration. That's 6 illustrations done by the home office, and we put them together to demonstrate what I am teaching. It's a demonstration, okay? And so they couldn't get past that. Okay, and in the second piece, we talked about the human factors. They'd skip that. It's like, this is not important. And so that's the biggest problem. And a lot of individuals thought all it was a book to sell, you know, insurance, like especially whole life insurance, because, you know, whole life lost its luster, you know, during the ERISA days. You know,
the E.F. Hutton days.
Yeah. E.F. Hutton, A.L. Williams, Ralph Nader. You stack them all up, and the insurance company didn't defend their best product they ever had. They didn't defend it. They ran from it, and they started creating all these variable products that compete with Wall Street. But anyway, long story short is Nelson. His greatest attribute was his perseverance, because he'd schedule a seminar, nobody would show up.
Right.
Yeah.
Okay, he'd travel to a seminar that somebody sponsored, and I went with him one time, and there was one person there. Okay, but he spent all day long with one person, and he got to know him, and hey, fantastic. But the book was big pushback, because people would open it up and they'd read it and go, wait, this is about life insurance, and they put it down.
Yeah.
Okay, and so that was the biggest thing. The people who got it in a big way.
Yeah.
And the folks didn't get it, wouldn't give it the time of day.
Right.
I guess that's why Nelson probably would say in his seminar, of everyone I ever heard, and even not in the seminar, when he would get frustrated, somebody asking a question like that, I heard him say 100 times, if you understand the concept, the numbers don't matter. If you don't understand the concept, the numbers don't matter.
Right. You know.
Yeah. All about the concept. It's about how you think.
Yep. It's conceptual. You're right. It is. And that was a big frustration with the insurance industry also, because you know, when I came out of the Army, I was, you know, any kind of military operation, you have a standard you train to. They call it task, the conditions, and the standard. That way you know if you're successful or not before you go into battle, and you don't want to find out if you're not successful then. Okay, so I looked at this book and I said, okay, we need to create a standardized system of this book. And number one, it needs to be, we need to try to get an insurance company compliant. Okay, try to get a concept through compliance at an insurance company. It's impossible. Right. And so he looked at me and said, have at it. And it didn't take me long, a couple of months before I said, you know, you're right, Nelson, you know, we don't need to do that. We need to stick with what we got here, because this is gold, you know, so forget about that.
And so talk a little bit about the Authorized Practitioner program. You know, that started in 2012, is that right?
2013.
2013. And was our group, were we like the pilot group for that? Or I know we were kind of at the onset. You came to our office and we all took the test together in the conference room over there.
Yeah, you guys got hands-on testing. Yeah.
So talk about the value of that, or the importance of that, or if somebody comes across the Nelson Nash Institute or finds IBC, you know, just, you know, on their own, what's the importance or the value of working with an authorized practitioner?
Well, the value is, number one, you've been vetted. Okay, you've taken the time to explore IBC and becoming your own banker, and everybody who's a practitioner, okay, they go through an interview process. We don't just take any kind of insurance agent and say, here's the course, good luck. No, we vet them. They get interviewed by Carlos and not myself and Lee, and we think they don't know what they're getting into, i.e., they just want another quote unquote tool for the toolbox, or if they don't subscribe to the whole life product and how it should be used and employed for this purpose, then we don't accept them. Okay. And so, of course, we want them to be successful also. So based upon what their goals and aspirations are in the industry, we say, well, this isn't going to work for you, and this is why. But whatever, they get accepted. They go through the course. The course manual is 350 pages long, 14 modules. Then they take a proctored examination. A lot of people they don't want to do that. Okay, proctored examination at my age, I figure out how to do that. But anyway, they have to pass the test. And then based upon their experience level in the industry, experience level with whole life, experience level with IBC, we either assign them to a mentor or we let them join the membership and be listed as a practitioner. And the important thing about that is that it's a resource for the public to use, to know that they're working with somebody who knows what they're doing. Okay? Because there's so much noise out there on TikTok and YouTube where this sounds too good to be true. Okay, and there's it's nuts. So the public has got to be cautious because unfortunately, even though Infinite Banking Concepts is trademarked, the term infinite banking is becoming generic. Okay, and so infinite banking is one thing, and that's using a specially designed permanent whole life product for death benefit and also your financial needs for your life, or better yet, a system of policies. If somebody's trying to sell you something else, or they're touting some overfunded policy that's not going to hold up, and they're not listed on my website, guess what? That's a minefield. Okay.
It's almost like the analogy of if somebody says I want a Coke, they might just mean they want a soft drink.
Well, exactly.
Yeah. And so if somebody says they want infinite banking, the only way to know that they're really getting the actual Coke and not just a soft drink, actually getting infinite banking, is to be working with a practitioner, right?
Practitioner, and we call them Authorized IBC Practitioners. Okay, and that's trademarked also. So, but we are doing some things behind the scenes that they're going to clean it up, though. It's going to make it easier for them to find us, okay, and to get the right thing. But IBC is a very, very specific what it is. It's not a generic term for anybody to do anything they want to, okay? And if you hear things like drive cars for free, then you got a problem, okay? So anyway.
I don't know how many years ago you kind of went through your story where you were taking care of your dad's finances, and it felt like this rich dad, poor dad analogy, kind of like the Robert Kiyosaki book. Will you talk through your experience with that and kind of just reflections from it?
Well, that's another episode, but yeah. Yeah, I call it the tale of two dads because I just finished with my father. He passed in 2021. Nelson passed in 19. And so I watched Kim handled Nelson's estate. Okay, and his estate was like 20 insurance policies. Well, how easy was that? And my father's estate was, and I worked with my father. We got together. I got together with him after watching Kim go through everything with Nelson. And so in 2019, I went down there, and I have four other siblings, but they kind of elected me as the guy, the pseudo,
administrator. Or whatever.
Yeah. And so I got with my dad and said, listen, we need to get everything in my name and get everything online and this and that. So I got a hold of all his finances. I got co-owner of his checking account, his savings account. I got it in everything. And so he had a mutual fund. He had 2 annuities. He had 1 term life insurance policy. He had a long-term care policy, which was separate. And he had a safe deposit box, which had about, $15,000 worth of double E savings bonds in them. And so I got a hold of everything. And so we got everything set up. So if he passed, we wouldn't have to go through the hoops and whatever. But we ended up going through the hoops because it was, it was crazy. I guess the essence of this, my presentation was focusing on the long-term care policy. And I don't want to bash that for anybody because that's important. So the lesson is my father really outlived his policy because he died when he was 90, I guess 95, I guess. But anyway, he funded this policy at $258,000 of premiums. Okay.
This is the long-term
The
care
long-term
policy.
care policy, $58,000 premiums. Something about a whole life policy that could have been equivalent to that. And the policy had a 90-day grace period for if you applied for the claim, you had to wait 90 days before the first check was cut. And so he lived by himself, and he had to either get out of the house or he had to have somebody take care of him at least 12 hours a day. And he refused to have anybody come in the house. So it took me a year to finally move him a couple of miles down the street into a long-term care facility, which he really didn't want to do, but I moved him in anyway. So I moved him in June of 21, and he kept. And so this policy was in force, and so I applied for the benefits, okay, in June of 21, and we had to go jump through hoops to make sure that he met 2 out of the 7
Activities daily.
So we had to go through all that.
Yeah.
And then we did the application and whatever, and da-da-da-da-da-da-da. And then they said, well, he's approved. And we're still paying premiums, though. Okay, I think his premium went from $125 a month when he first applied for this policy, and he was paying $476 a month for the last, 4 or 5 years. Anyway, so we everything was approved, da-da-da-da-da-da. And he had, and so the first 60 days the first 90 days we had to prepay a month. The first 90 days in the facility cost him about, $20,000, something like that. I can't remember. So now we're up to about $80,000 out of pocket with premiums and payment. And anyway, he dies. Unfortunately, he died in September of 21. Okay, and it was like a week before the first long-term care check was going to be issued, and so but he did get a check from the long-term care company. It was like $136, which is a return of premium for that last month that he died. And so I do the analogy. Okay, if you had $58,000 in premium in a whole life policy, you could potentially use it for long-term care use. Sure. And if you died, you'd have a death benefit.
Yeah.
Okay.
Over a couple $100,000 or whatever it would be.
So he was in the hole for $60,000 plus on that policy. So that was number one. Number two was when he retired from the Army in 1969, he bought a term policy, but it was a decreasing term policy, which means he had level premium, and what changed every 10 years, they decreased the face amount. So it started off at $20,000 face amount, and he was paying X number of dollars a month. And when he died, the face amount was reduced to, I think it was down to the benefit check that my sister got was like $3,400. And so he'd been paying premiums since 1969 on a term policy, and the benefit check was $3,400. So that was number two. And number three was the double E bonds. I don't know if you guys have ever tried to get those changed over to a beneficiary or whatnot, but you have to jump through a lot of hoops to get that done. Okay. And oh, by the way, everything in there is taxable gain, everything. So a little $50 or $100 face amount double E bond, you pay $50 for it, and when it matures and it sits at interest, it'll mature to $216. So everything above 50 is taxable income. So all you have is he didn't want to touch any of that stuff because I don't want to pay tax. I don't want to touch it. Well, why'd you do it for? Okay, and then he had two annuities. One was being paid, and the other one was maturing in like 2026. So the guy when he died, he was 95 years old. He had an annuity that was maturing in 2026. So does that make sense? No, it doesn't. It just did, everything was upside down. And again, the annuity he was getting, he goes, I don't want this. He was getting $1,100 a month. He goes, I don't want this money. I don't need it. I don't want it because I don't want to pay taxes on it. And so I said, well, so he ended up 1035 in it to another annuity that he could get a $550 distribution monthly, which reduced his tax burden, and it left more on account for his beneficiaries. But all that gain was taxable for his beneficiaries also, right?
Yep.
So that was him, and then you contrast Nelson Nash, and I just used the as an example. I didn't talk about all the policies because I think that's something you shouldn't be sharing, but as an example, I used the State Farm policy in the book Building Your Wealth, showing that here's a policy that he had no money in, quote unquote, because he was paying a small premium on a whole life policy. And he'd already taken out a whole bunch of policy loans and paid them back. But to prove a point, he took out 4 dividend checks from 2006 to 2009, which equaled over $15,000 in tax-free dividend checks, which was equivalent to his premium he'd paid. Okay. And with all that, he had a policy that was essentially free. I know that's not the right compliant word to talk about, but that's what it was.
Yeah. He had gotten all of his cost basis out.
He got everything out of it, and plus he used it to buy a bunch of stuff like land and whatnot. And oh, by the way, it was a $20,000 face policy, face amount $20,000. And Mary, his wife, received a beneficiary check of $137,000 after all that. I mean, Nelson would say, "Isn't that good?" Yeah. Okay,
that sounds pretty good.
I mean, it's pretty good.
Yeah.
Okay, and that was a vanilla policy. When he bought that from his brother-in-law, his brother, who was a State Farm agent we talked about earlier. It was just a vanilla-based policy because nobody knew anything about PUAs back then. I don't even know if State Farm even had that as a rider.
The brother he's having a conversation with right now, since they both graduated.
Yeah. His brother predated him, but that's the story.
Yeah.
I mean, it was good. Yeah. But, Mary just passed, a couple of months ago. And she had 3 sizable policies. So that's easy, man. Yeah. You just got to figure out what you want to do with the money. Do you want to leave it on an account at interest? And I think it's 3% now for this company, or do you just want one big check?
Well, David, this has been great. I know we could go on for another 2 hours and keep going. We'll have to have you back for sure. But when we wrap these up, we like to ask everybody the same question. It helps with perspective, and so it's a 2-part question. I'm going to ask both parts and let you expound on both of them. So, if you think back 20 years ago, 30 years ago, if somebody would have asked you, David, how would you define success? What would your answer have been? And how is that different than what your answer would be today?
Oh boy. Success would be like financial success, like not worrying about money, family happy and healthy and not have to worry about money. Mm-hmm. What is it now?
Yeah. What's it today? How's it different?
What's different about it now is you have to have a goal in life, an achievable goal in life. Okay. And you have to focus on it and you have to live towards it. And of course, I'm a Christian, and I have to give Nelson credit for that also. Okay, because before I call it a immature baby Christian before I started working with Nelson, and now I'm much more mature. Mm-hmm. And so I'd say, success now for me is to live for the glory of God. Mm-hmm. Okay, and focus everything towards that and which is a lot different than my first definition.
Yeah.
Okay.
Awesome. Well, David, thank you so much for that. Glad to have you here. And with that, we'll wrap up. Thank you for joining us for the Save Yourself podcast brought to you by Unlimit Wealth.
I enjoyed it. Thanks very much, Guy. Enjoyed it.
Thank you.